Hi, this is Kerry Artak with Wicked Stocks, bringing you another stock analysis video. This one on FuelCell Energy, symbol FCEL. I did record this video on Tuesday, August 10th, 2021. FuelCell Energy, who are they? If you're not familiar, they're an American fuel cell power company that design, manufacture, operate, and service direct fuel cell power plants, a type of molten carbonate fuel cell that run on natural gas and biogas. Their power plants are not considered hydrogen fuel cells because their feedstock is not pure hydrogen, and the byproducts of electric generation include carbon dioxide. As one of the biggest publicly traded fuel cell manufacturers in the U.S., the company operates over 50 plants all over the world. And they did recently rally over the last week on news that they secured a $15 million financing from East West Bank to fund production of a 7.4 megawatt fuel cell project for the U.S. Navy submarine base in Groton, Connecticut. Wicked Stocks offers two forms of membership, free and premium. Free membership is exactly as it sounds. For no cost or obligation, you will receive one free stock video analysis a week, typically released on Mondays. And if you provide your name and email address, you'll receive an email from us each and every time a new free weekly video is ready for viewing. The second form of membership is premium and provides at least two stock videos every week and costs $24.95 a month. Just click on the premium membership link, fill out your payment information through our safe gateway portal, and you'll receive an email each and every time a new premium video is ready for viewing. Cancellation is allowed at any time. And I think that's about all I'm going to say about it, other than the fact that they are just barely into the mid cap. They got a $2.3 billion market capitalization. So they're in the mid cap zone, FYI. And I'm going to take a look at the charts. You're presently looking at, a long-term chart, obviously. It goes back to the early 90s, some 30 years of activity. The extremes were a high in the year 2000 of $7,830 a share. And the lowest they've been was most recently a couple of years ago in October of 2019 when they got down to 13 cents. And you can see they've been trading in this sort of very quiet. I mean, it's like a horizontal line there on that chart. I'm going to open the chart up a bit to take a look at the last few years. And you can see, first off, that there is a former channel top the market pushed through in fall of last year in 2020. I'm not saying that buy signal set off that rally. I'm sure there were fundamentals behind that move. I don't know exactly what they were at the time. But that is a former structure that I'm going to consider kind of a decent floor of support. 526 rises 3 cents a week. And this is the week of August 9th. So the week of August 16th, it'll be at 529, so forth and so on. So that 520s, 530s over the weeks ahead represents a base of support, I think, that could actually absorb selling through the rest of the year. And this stock actually remains stable above it. Now, you can obviously see the week we're in, a decent rally. We're 2 days into the week as I record this. So we've had a nice spike. That news came out, obviously, over the last day or two. And so here we are. Now, the question for me is when to buy it. When to actively buy this stock. There is a descending channel top structure that you can see includes activity for much of this year. I'm going to zoom in once again so we can take a better look at that. And you can see that descending channel top is at 861 this week. So the purpose of this video, there's no buy signal underway presently. That would come if we close the week above 861, a share. You can do this on any day, by the way, of course. And but the full buy signal, if you will, it'll be tentative on a daily settlement above 861, definitely actionable. But then at the end of the week, you really want to see the market also close the week itself above 861, and you want to see that obviously by the 1% threshold that I like to see, which we'll just say is another 8.5 cents higher. In other words, 869 or higher on a daily basis settlement or at the end of any week. Now, some people put in stop losses, not a stop loss, a buy stop at 869. So if this market rallies into later week and tags 869, you're long. Obviously then you want to see the market close the day above 869. That's the more aggressive approach. The second most aggressive approach would be waiting for the day itself to settle 869 or higher. And then, of course, the final would be a clear weekly settlement on Friday of 869 or higher. And under that scenario, I think you've got a decent chance for follow-through over the next, I'm going to say, couple of months, 2 to 3 months at the most. It could be a more accelerated pace. It could be 2 to 3 weeks. The timing is obviously difficult to ascertain, but, really kind of a near doubling of the value from 861 up to 1734. 1734 is based on the same descending structure. It's based on those same lows. And so it comes in at 1734 this week, dropping also 47 cents a week. And that would become, I'm going to call that your best case objective. I think it's realistic, but I also think that even if we only rally to this other classic structure at 1221, that in itself is a 40% gain above 861. So, you've got two targets. The initial target would be 1221, and then ultimately we could see 1734. I think the safer bet obviously is 1221. That's dropping 5 cents a week. And you can see that horizontal channel structure. So if we close above 861, and why I'm leaning more heavily on 861 with the settlement above the ultimate target to be 1734 is because that is a longer term structure. And closing above 861, I think, would have longer term consequences. In other words, over the next couple of months, 1734 realistic. Along the way, that 1221 could certainly contain weekly, possibly the better part of a monthly high. But I honestly, my bottom line here is closing above 861 by the 1% margin. You should allow for 1734 over the following month or two. And that's a near doubling of the stock price. That would be a good play. At this point in time, though, I think 861 even is your floor. 861, is your ceiling, and 526 is your floor. We could trade inside that wedge all the way into September trade. We could certainly back off from present levels. The high so far this week is 831. So we've rallied to within, a few percentage points of that 861. We could certainly back off from here and perhaps fall back to 526 over the next few weeks. We could trade inside the zone. So there's really nothing to do right now. The actionable event would be a settlement above 861 by the 1% margin. And then you have a buy signal. The question is whether you liquidate your profits at 1221 on the way up, or you liquidate a portion at 1221, or you just hold out entirely for 1734. No guarantees, obviously, as to where that stock would stop along the way. So I'm just sort of outlining a scenario here that once again becomes actionable with a daily settlement above 861 by a 1% margin, followed by a weekly settlement of the same. And then we've got gains potentially of 100% over the month or two ahead. But I think realistically, at the very least, 30 to 40% gains into the $12 area. And that's really all that needs to be said for this particular Wicked Stocks video analysis on FuelCell Energy.